And I think the best way, Becky, to explain it is if you look at our first quarter's results and you look at what happened to revenue and margins during the period. Brent was up $7 a barrel, WTI was up $5 a barrel. We would have anticipated that earnings would have been up by something like $1 billion, $1.1 billion, just based on that revenue increase alone. What the analysts would not have understood is that we had an enormous amount of planned maintenance in our business in the quarter, largely affecting our refining business. You know, these refineries, when they come on, when we're operating, excuse me, my earpiece is coming out.
Sure.
When they come online, we have to take them down for statutory and regulatory inspections every several years or so. And that warrants taking them offline. We do a lot of maintenance, a lot of inspection. We would love these to be regular across all the quarters and across all the years. It's just not like that. And we had a period of high turnarounds in our refining business with some unplanned maintenance. That accounted for an $800 million difference between the first quarter and the second quarter in terms of earnings. We had some foreign exchange impacts. The foreign exchange impacts, stronger dollar versus the euro and the UK pound. And we had high asset sales, about $400 million in the first quarter that we didn't have in the second quarter. So we had that up, 400 in asset sales, 300 in forex, and 800 in this maintenance, 90% of which was scheduled. Well, there you got $1.5 billion, which I don't think the investment community would have seen.
Hey, Neil, let me ask you, if you're talking about $800 million in maintenance that was regularly scheduled, but the analyst community didn't see it coming, is this maintenance that had been put off for a long time and kind of caught up, or is this maintenance that you were pulling forward from additional years? So should the street be taking its numbers for maintenance spending down in future quarters? I'm just wondering, again, was this stuff that was a long time coming, or is this stuff that you pulled forward?
No, and neither, Becky. This is planned maintenance. It goes in peaks and troughs. We take these turnarounds on these refineries at different times. They come every several years. And we just had a peak in the second quarter. So it was a large amount. We had several refineries down. And, of course, you get the double impact when the refinery's down. First of all, you lose the volume, and at these strong margins, that's a big impact on earnings. And these are big maintenance activities. And so we spend a lot of operating expense. Neil,
I guess my point is it seems unusual that the street wouldn't know about $800 million or know to anticipate that sort of an issue. And I know, again, that Darren Woods has been trying to make things more transparent to the street. It's been a bit of an uphill slog trying to explain that he's going to be going back to Exxon's old ways of making sure that you're spending money and investing, hoping that that pays off down the street. And the street's been a little skeptical of that. So when they see a big surprise, $800 million in maintenance they didn't know about, how can that be better communicated? And what can you tell them about what to expect the rest of this year and into the next couple of years if this happens every few years?
Well, yeah, let me be clear. It's $800 million in lost revenue from the plants being offline and for maintenance.
And because it was higher margins at that point.
Yeah, absolutely. And look, and of course, we want to be transparent. I mean, I'm on the call here. I will be on the earnings call with the investor community in a few minutes after this discussion here. And we are bringing a level of transparency with the investment community that maybe we haven't done historically. This was planned for the year. It's no surprise to us. I do want to say, I don't just want to reconcile away the second quarter versus the first quarter and say it was all planned maintenance. It is important to note that we had a disappointing quarter in the first quarter in terms of non-scheduled maintenance. Again, most of it in the downstream business, some of it in the upstream business. That did roll over from quarter to quarter. And we pride ourselves in ExxonMobil for being the world's leader in terms of operations and operations excellence, making sure that we have the most safe, the lowest cost, the most reliable operations. Those are behind us, but some of those unplanned maintenance did roll over from the first quarter to the second quarter. We're all over it as a management team. That we were disappointed about. Now, of course, part of that unplanned maintenance was the earthquake in Papua New Guinea that impacted our operations. Of course, we've recovered from that. That was a big incident, and we were very pleased with the recovery. But those unplanned maintenance is activities that, of course, we're addressing very clearly.